Hello everyone, and welcome to today's Market Close Report. Let's get right into the numbers. The U.S. market today showed a modest gain at the index level, with the S&P 500 ETF closing just above $765, up 0.37%. The NASDAQ 100 ETF was similar, also up 0.37%. But if you only look at the indices, you would miss the real story of the day. Today's market, in one word, was a structural risk-on day, not a broad rally. The money did not spread evenly. It flowed very aggressively into a few specific directions. The two strongest areas were crypto assets and the new energy vehicle leader. On the crypto side, the Bitcoin ETF surged 5.51%, closing above $43. On the EV side, Tesla jumped 4.78% to close at $362. The weakest area was the AI chip leader, NVIDIA, which fell 1.07% against the trend. That divergence tells you everything. Capital is not doing broad buying. It is actively rotating, moving out of the previously high-flying AI computing space and into the crypto ecosystem and the auto tech chain. Now let's turn to our A-share market. The close today showed a similar structure. The Chi-Next index performed the best, up 1.43%, and the Shenzhen Component Index rose 0.87%. But the Shanghai Composite and the SSE 50 were basically flat, up only 0.04 and 0.07% respectively. What does that tell us? It tells us that the Asian market is in sync with the US market. Capital also favors the growth style, but the heavyweight blue chips are lacking incremental buying. This pattern of growth outperforming value, appearing on both sides of the Pacific at the same time, confirms that risk appetite is contagious across markets. So the answer to where the money went today is very clear. It did not go into defensive assets. It did not do diversified allocation. It concentrated its firepower on high beta names. As for NVIDIA's decline, we tend to see this as profit-taking and position rebalancing within the AI computing leaders. It does not constitute a systemic risk signal, but it is a high-level divergence worth noting. The biggest surprise today was that both the Bitcoin ETF and Tesla rose by nearly or more than 5%. In the absence of any major macro event, for these two names to rally that much in tandem tells us that incremental capital is not focused on the macro picture. It is focused on industry trends and position rebuilding. Also, the market ignored NVIDIA's pullback today. The weakness in the AI chip heavyweight did not dampen overall risk appetite. This is different from the past few quarters when AI computing was the only game in town. This is a new structural signal. Because the dollar index and U.S. Treasury yields data are missing today, the traditional three-way linkage of currencies, equities, and bonds cannot be fully reviewed. So the confidence level on related judgments has to be lowered. But what we can confirm is that there is a weak resonance between the A shares and the U.S. market. Now let's lay out the current market main lines. The first main line is the crypto ecosystem, clearly stronger than the market, with a probability I would put at 70%. The basis is that the Bitcoin ETF, MicroStrategy, and ARKK all strengthen together on volume. The second main line is new energy vehicles and growth innovation leaders, stronger than the market, with a 65% probability. The core logic is Tesla breaking out of its recent platform and spilling over into the broader growth stock risk appetite. The weakest direction is AI semiconductor heavyweights. But we only have one day of NVIDIA's decline, which is not enough to confirm a sector-level trend. That is a weak judgment and needs further observation next week. Let me give you the key levels to watch for tomorrow and early next week. First, for the A-share Chi-Next index tomorrow, if it opens higher and does not fill the gap in the first hour, then the growth-style repair will continue. The key level is whether it can hold above 3,500 points. Second, for crypto continuity, if the Bitcoin ETF can hold above $43 in pre-market or during Monday's U.S. session, then the inflow trend is intact. Third, if the dollar index strengthens again on Monday and stands above 104, then emerging market assets will come under pressure. But that is a weak judgment. Fourth, if Nvidia breaks below $214 and US futures decline in tandem, then the AI computing correction could spread to the broader market. But the probability is only 50%, so again, a weak judgment. To sum up today's strategic bias, we lean toward controlling positions and going long. The direction is structurally bullish, but positions should not be aggressive. Confidence is at 60%. The conditions for early positioning are, first, the Bitcoin ETF staying above $43 before Monday's open, and second, the Chi-Next index gapping up more than 0.5%. If US futures fall sharply on Sunday night, or if the Bitcoin ETF gaps down, we abandon the plan. Also, if the VIX rises back above 20, or the dollar index clearly stands above 104, the strategy should be immediately downgraded to a wait-and-see stance. Our probability judgment for tomorrow is as follows. Up 30%, range-bound 45%, down 25%. Alright, that is all for today. See you tomorrow morning.